Hey everyone, it's Thursday morning, October 31st. Welcome to Capital Markets Quickie. I'm your host, Endrit Sella, and let's talk about what was moving the markets yesterday. Before we dive in, a quick reminder, today's episode is sponsored by AMF Capital Asset Management Frankfurt. For personalized investment solutions and high-quality mutual funds, visit amf-capital.de. Alright, so yesterday was a big one for earnings, especially in the tech world. But let's start with the general market picture. Stocks were mixed. We saw the Standard & Poor's 500 slide about 0.3%, the Dow dipped nearly 0.2%, and the Nasdaq fell around 0.6%. Big tech is in the spotlight, and it's clear investors are closely watching how these earnings might drive the market as we head into November. Let's dive into Alphabet, which reported after the bell on Tuesday. Their quarterly earnings blew past expectations, thanks in part to strong performance in cloud and AI. Shares jumped around 3% in after-hours trading, which set a pretty upbeat tone. Microsoft followed suit with a strong report of its own. Their cloud business is booming, with commercial cloud revenue coming in at $38.9 billion, beating expectations. They also reported earnings per share of $3.30, well above the anticipated $3.10. Microsoft's investment in AI, particularly through OpenAI, is really positioning them well, even with fierce competition from Amazon, Google, and others. Switching gears, Meta also posted some impressive numbers. They saw a 19% jump in revenue to $40.6 billion, with earnings per share at $6.03. CEO Mark Zuckerberg highlighted AI advancements and new projects like AI-powered glasses. Despite the positive report, Meta's stock slipped over 3% in after-hours trading. So, a lot of tech optimism is there, but the market still seems cautious. Now, let's talk Starbucks, which has been facing some challenges. The coffee giant reported a 7% drop in global comparable sales for the quarter, largely due to a slowdown in the US and China. Their loyalty program and promotions haven't been enough to counter more cautious consumer spending. In China, their second biggest market, comparable sales dropped for the third straight quarter. Starbucks is betting on their new CEO, Brian Niccol, to shake things up and revitalize the brand, especially in the US. But so far, the numbers are lukewarm. In the economic data front, new data showed US GDP growth slowing a bit, down to an annualized 2.8%, and a bump in private payrolls was also reported, adding some uncertainty ahead of Friday's jobs report. With the Federal Reserve's next interest rate decision looming, all eyes are on these data points. So, it's a packed week for markets, and big tech's performance is crucial, especially with the Fed and economic data on everyone's minds. Thanks for joining me on Capital Markets Quickie. I'm Endrit Sella, wishing you all a happy Halloween today, and I'll catch you tomorrow morning for the latest.